All right, and it's 876 Invest again, and we're back with another banger IPO. It's IPO season again, and today we're here with Dolla Financial Services. Now, Dolla is looking to raise $500 million, and that's the maximum amount that a company can raise on the junior market. Now, Dolla Financial is offering 500 million shares, and that offer will be split between a reserve pool and the general public. The general public will be getting 212.5 million shares, and the reserve pool will be getting 287.5 million shares. And the use of the proceeds from this IPO will be to grow the company's loan portfolio through acquisitions and organic growth. And they'll also be using the proceeds of this offer to obviously clear the expenses related with the IPO, the related lawyer fees and listing fees, as well as clearing off debt from existing shareholders. Now, this offer opens on Friday, May the 27th, and it is scheduled to be closed on June 10th, 2022. But again, we always say this: treat the opening date like the closing date. However, I must make mention of some pending rule changes by the FSC that would require IPOs to remain open for at least 3 days. Regardless, we strongly advise that you treat the opening day like a closing day, because you can apply before the actual opening date. All applications made before the opening date will be treated as if it was done on the opening date at the opening time. So we always will advise treat opening at the closing date, get all the affairs in order as early as possible, and do what you need to do. All right, and I'll hand over to Nunez to tell us about what the company does and give us some background into the company.
So we can basically see that the company started operations in 2014, and during 2014 to about 2018, they had a Cambio license. However, we can see that in the business there, the model, I guess, started shifting away from that aspect to more undertaking loans. So they gave up their Cambio license actually in 2018, and that's where the story, this great story, really begins. And this is where they start to undertake, more loans to give to clients, I guess, raise money. And this is where the business blossomed to where it is right now. And especially looking at how the environment was prior, interest rates gradually went down from, of course, 2009 recession to 2019, where we see that interest rates moved from 5% from about 2014 thereabout to about 0.5%. So here we have an environment now for this business to flourish.
Indeed, because I mean, for those who don't know, the business that they are currently in is loans, microfinance loans. So it's loans to smaller players. So the low interest rates result in a lower cost of capital for Dollar themselves. And as we know, microfinance institutions tend to have a higher interest rate if you go to them, due to them needing less security and those type of things. So they benefit off of the interest rate spread between the loans that they take out and the loans that they disperse. So when they have a lower cost of capital, it is much better for them, because the spread, the rates that they charge to the people, they get to keep a higher percentage of those rates going forward. Dollar Financial actually has a wide range of products, and they're very well diversified across these product lines. They have two major lines that make up the most of their revenue, though. If you look here on this slide, you'll be able to see that they have their Dollar Elite, what am I gonna call that? Product, same way?
Yeah, the only product. They're all products, I guess.
Yeah, I guess. You have the Dollar Elite product, which makes up about 46% of the interest income. Now, what that product is really geared towards entrepreneurs and high net worth individuals. Usually, what they say they disburse it on is unexpected accounts payable. So usually, what you'll find is that a person may have some cash flow issues. An expense may come up in the middle of the month that they weren't planning for, and they're getting the cash maybe next week or 2 weeks after, but the expense needs to be sorted now. They may link Dollar and link the Dollar Elite and say, all right, give me X amount of funds, and then they clear it up. When they get their money, they'd pay it back. The other major product that they have is the Dollar Value Personal, which, as you can see, makes up another 34%. So these two products together make up 80% of Dollar's interest income, which is their major revenue. No, the dollar value personal loan is usually targeted at employees, both public and private sector employees. That's when they need funds for legitimate personal use. Now, I'm not 100% clear on what legitimate personal use means, but I'm assuming it means like not like a party loan or something. You may need it for actual things to improve your life or expenses that you need to clear in the time. Those loans can be either secured or unsecured, but the dollar elite are almost always secured. They were saying in the prospectus. Now, I'd advise you to go and check out the prospectus to get a better understanding of those products and the other products that they're giving that make up the other 20% of the revenue. But we get into some interesting things. So we see how the revenue is broken down by product. But let us check it out by secure business versus personal loans. So let us check it. All right, may I go back because I must have secured. All right. Now let us check it out by business versus personal loans because these are the two types of clients that they have. Now, what I really like about this, and the other guys can chime in at any time and tell me how they feel, is 64% of their loans are not only secured, but are secured business loans. Now, Mr. Nunes, for those who don't know, also operates a microfinance business, and I'm sure he can tell you it's much easier to collect money and deal with businesses than it is with individuals. It's just a simpler process. So both the fact that it's secured, which means that in the case of default, there is alternative measures to recoup the monies that was loaned out, as well as the fact that it's business loans, which means that it's a more transparent process to go through to collect your money.
Definitely, you're completely correct, Sean. So, looking on that section too, that really makes me happy because it's right up my alley and right about what I think about in terms of my business model as well. So, when we talk about secured business loans, we talk about assets, we talk about possibly cash secured, we talk about strong instruments as well that can act on that behalf because we in microfinance industries we also get creative in terms of sometimes what we would consider as collateral. So we have to remember, we're offering, you can call it an alternate way to finance businesses, not from your traditional bank loan. So we take on sometimes more riskier assets, but when we do our vetting, which other microfinance companies can attest to that, it's pretty even can be said as rigorous as the banks, but maybe a little bit more seamless and maybe a little bit more understanding. So I would say microfinance people is like from a yardy perspective, you're getting an IRA loan. You get me? Your business will be properly vetted and of course the proper avenues taken to ensure that this money is going to be put, as Sean said earlier on, legitimate usage and being used for the purpose that it was being set out for. So much more control. Businesses, as you know, good businesses, cash flow is king, and that's what you want to look for when you're in the microfinance industry. You want to ensure that these companies are able to pay their interest rates, and if any issues should arrive, negotiations can be met, penalty fees will be taken. However, the aim is always, because as BOJ standards keep it, you want to keep your loan book with a delinquency rate below 5%. So pretty prudent information here, I see from the dollar camp. I like that. I like the unsecured loan rate as well. And I mean, Sean, you can just dive into the
I
rest.
mean, as you touched on the unsecured loans, I was about to say don't think about it as a downside either, because remember, for for those who may not know, unsecured loans would attract a higher rate of interest than secured loans. I mean, naturally, there's more risk being taken on. So the fact that they have this nice mixture where a lot of their non-secured loans are personal loans, the fact that they have this nice mixture where 30% of the loans are still unsecured, but 64% are secured. That allows them to benefit from some of the higher interests on the unsecured loans while maintaining the security of having the majority of it tied up in secured loans. Now, this is also not unsurprising because, as we just saw in the previous slide, a large majority of their revenue comes from their personal loan facility. Between that and the dollar elite, that's where most of the revenue comes from. So this isn't scary. And I think it's very important to point out, because in Jamaica, a lot of times when we talk about microfinance, we think about payday loan and scam artists. So it's very, very key to take note of the fact that Dolla is lending more to businesses than to persons, and that these loans are secured as well. So it's reputable. They've gone through, they've done their checks, and done what they can to minimize the risk on these loans. I think it's very important to note.
And I think that it's a good look overall, because we all know Jamaica is deep in this hustling culture. So Dollar is tapping into a very an underserved market, and it's a very necessary market for Jamaica's overall development, I think. So big up Kadeen again for that, because honestly, the way that they approach it, especially with the reality is the persons who get funding from microfinance institutions are the ones that are typically overlooked by the banks and won't be able to get lines of credit or get funding from the banks. So we are now, they will fill a very, very big gap, and that's something that we can appreciate based on the country's culture, how important it is, especially considering that, I mean, as Sean mentioned, they have the balance of the security, having the secured business loans, and then the higher rate of return from the unsecured personal loans. And we can see, I mean, you can look in the prospectus, you'll see that the rate of the non-performing loans is favorable. It's something that I mean, they have been dealing with it very well, and they have made mention of like Nunez mentioned creative ways to get these transactions done. They have creative ways to have their means of collections. You have bank standing orders. You have advances on your pay. They'll get direct collections from your pays, deductions, pay deductions, right?
Indeed.
And
They
Nunez
even went
mentioned,
so far as to say in the pandemic that they went in and reached out to some of the clients that they had relationships with and made alternative arrangements, because they knew the situation was going to change. And so
yep,
since the terms couldn't remain the same, they reached out and said, okay, how best is it that we can work forward to ensure that you continue to receive your benefit and I receive my return. Now the entire 876 Invest is we did a course on financial development and financial inclusion. So we apologize if we go a bit too deep into the access to finance right here, but it's very, very interesting for us. And I think it's part of the reason spurred even Nunez to start his own microfinance company, to realize that this great opportunity is here in Jamaica. And there's a long, long runway for this company, and they're setting themselves up really nicely.
yep,
Definitely,
And
man. That's what we as small economies need. As we
indeed,
can see, it's the small man that contributes the most to the country's GDP. So you need to get the small man on the payroll. You need to get him his cash flow. And all of these institutions, microfinance institutions, specifically Dollar here that we're talking about, they all aid in this huge congregation or coming together of the economy, because as you rightfully said earlier, the banks can't do it all themselves because the bank has different requirements of how they're willing to give out loans. Because bank is not just a loan institution. Microfinance speciality is in loans. You get me? The bank doesn't specialize in giving loans per se, so they're not necessarily the best institutions that you would go to in order to get certain things done. Banks more, or I should say, mortgages. Banks specialize in mortgages. That's their thing. Microfinance institutions don't necessarily specialize in mortgages, because even in this IPO, in the prospectus, you can see that the average duration of their loans tends to be within a year's time. So different means of financing different projects, because not every project needs, as for example with a mortgage, needs 30 years or whatever. Sometimes, there are different forms. Bridging, just a bridge loan to get a deal over the edge for just a month. A 3-month loan to deal with purchase orders or receivables. So, microfinance industry, pretty interesting. A lot of different creative ways. And even on the unsecured time, unsecured part, we can say that the risk is much high, but trust me, in a functional economy, it's more prudent for people to actually really be interested in these loans. And plus, every microfinance institution has a cap. So they have a cap with how much they're willing to lend each individual. On, for example, these guys have different products, and each product will have a cap itself of how much they're willing to manage in terms of each person's risk profile and a general company's risk profile. So, I mean, basically what we're seeing here is a proper balance, 60-30, pretty good. And then with the cash flow growing even more, I mean, you probably find that this personal loan section here even further outpace the business loan section, you know. And I mean, that spells
That's
good stuff
definitely
for
gonna
our
do what you.
economy too, because it means that people are willing to pay off their loans. So
Mhm.
that's always prudent. And once you borrow one loan, you're going to want to borrow another one in the future, seeing that it all goes well, in which more than likely it should. As we can see here, Dollar has a low, in the prospectus, they have a low delinquency rate. And I mean, it should be positive things going forward.
Indeed, indeed. I'm glad you touched on that risk thing because I want to move forward to say that they've been managing their risk very well in how they distribute these loans. Now, if we look here, this is a very even chart of industries, sectors that Dollar distributes their money to. Now, the largest sector being trucking, haulage, and transportation at 22%, followed up by construction at 18%. But it's a pretty interesting mix. Like everything is so close to each other. It almost no impact in any one sector should impact the overall business, and that's something great because you don't love loan concentration. Because if you have an adverse event, let's say tourism, which makes up only 6% of their loan portfolio currently, if you had 90% of your loans to tourism in 2019, and when Corona come, you're in shambles.
Yep.
So I mean, this is something we love to see. Any one sector that gets hit, they'll be able to stomach that hit and say, okay, we'll adjust going forward without it impacting their earnings too much. So it's very interesting. I'm really loving the way how this business has structured their portfolio to this point.
Definitely, fully agreed. Because as investors, we love to see a managed portfolio per se. So here's a good managed chart for you,
Yeah.
and a good managed um, business lines, as you can see here, manufacturing. And otherwise, from that, a lot of these customers wouldn't have a chance to access these funds without Dollar or another microfinance institution even stepping into their space. So I mean, good stuff because some of these businesses here are heavily cash denominated, you know, bringing a bill of sale to the bank, bringing a sometimes even a car document to say, okay, here is a collateral, you know, may not be so easy or may not be that fast or efficient enough, you know. Even Dollar, I mean, these guys process your business loans in a couple of business days, you know. So I mean, fast and efficient and a balanced risk, you know. So
So can
far,
you
so good.
30-minute disbursement, You see him tweet about
And
30-minute disbursement as fast as 30 minutes.
30-minute
yeah, man.
disbursement.
If all your paperwork is good to go, then they'll get you through. But I want to bring it back. I want to make sure the viewers following me now. So you see, we like how the mix of secured business loan to unsecured personal loan come, and then in that 64% of secured business loan, you see the variety in the sectors and diversification to further manage the risk. So I want to make sure, to me, this is very, very solid business planning, and goes to show that the team over at Dollar has a plan, and
Mm-hmm.
knows exactly what they're going for. So I'm liking it.
Microfinance is not something that is as safe as commercial banking. So to see that they have the portfolio structured in a way where you can look on the company and take reliance on how it is structured and feel safe because they have a good balance in secured versus unsecured. The adjustment for the returns they expect on in relation to the amount of risk that they take on, um, as you'd see with the balance with the unsecured and secured, because the unsecured have the higher rates. And on the flip side, you'll also be seeing how the loan portfolio is separated by sectors. As Sean mentioned, one sector hit won't really be too detrimental to the entire composition of the portfolio. And that's something that I think is very good to see. Looking onto the company, it feels safe. It feels safe, well managed, and that's good to see.
So now let's get into the exciting stuff. I'm going to have Dundas start by talking to us about the balance sheet and the audited financials. Dundas, talk to me.
All right, so we'll quickly look at the key points. So understand that the line of business that we're dealing with here is microfinancing, and that is why you'll be seeing loans as an asset, because the loans that they give to their clients is an asset to them. That's what they use to generate their income. So we can see here in 2021 the significant growth in comparison to the previous year, where we're moving from 294 mil to 750 mil in loans, and that is because of, in the wake of COVID, coming out of COVID, they started to offer a whole lot of new uh, products, and those are products that we spoke about earlier. And along with the products, we've seen equity injections and additional debt raised for them to continue to issue loans. So in the same way you see the assets here with the loans, that's why you'll be seeing on the balance on the income statement interest income as their line of revenue. This is how the business operates, and for accounting purposes, as I mentioned, the loans will be the assets, and these are the income generating assets for the business. So this is the probably the most important asset on their balance sheet. We can see also that the cash balances have significantly increased from the previous year. And I mentioned the loans payable also increased as they raised more capital to lend more to their client base.
So if we move on to the audited income statement here, well, the first thing to note is that you'll see here the year ended the 31st of December 2021 as compared to 18 months ended December 2020. The reason for that is when First Rock Private Equity acquired 75% of Dollar, Dollar then changed their financial year from, I believe it was June to December, to coincide with Dollar's financial year to ensure easier consolidated reporting, which is something that happens fairly often in acquisition. So it's nothing strange. So the interesting thing to note is that even on this 18 months period, their interest income, which as Dundas was just explaining, for the purposes of accounting, loans have to be booked as assets, and the interest income is what they can book as revenue in the business of giving loans. So the interest income grew 54%, even when you're adding in an additional 6 months in the previous year to compare to, which is insane. So the profit before tax up over 850%, total comprehensive income up over 700%. It was a banger year, and I mean, if you look at the 5-year financials in the prospectus, you'll notice that Dollar, after the capital injection from First Rock and the acquisition, there was a lot of streamlining of the operations. It seems that that acquisition formed a very good synergy for all parties involved, and Dollar then quickly cut some costs, increased revenue, gave out more loans, increased the portfolio, and is showing the return for it since that period. You see, even for the quarter over quarters for March this year, these are unaudited numbers. But what you see happening is interest income is up another 162%. Net profit is up another 400%. The net interest income is up 200%. Profit before tax up 280%. And admin expenses are up, and their admin expenses are only up 71%. This is an insanely growing company. They speak about the employee growth that they have, so you know that they're taking on a lot of business. They have to be bringing on people, and to keep this level of growth with the expenses only growing at that percentage, I mean, it's crazy. It's crazy. I'm very, very impressed at the efficiency. If you even they make mention of their efficiency ratio several times in the prospectus, and it's a number that they should be extremely proud of, because they really did get the operations in an extreme order. As Nunez said earlier, with the new microfinance act that's coming, which we'll get into a little bit later, there's going to be a cap for microfinance institutions on their default rate, and Dollars was exceeding it, and they did their best and they brought it down, and now it's right in that 5% range that's allowed. So it's a whole lot of work you see going on to the business. So I mean, it's very, very impressive stuff.
I should mention though that the net interest income, not only just the interest income, the net interest income is important to look at, because in the same way we can look at the rate of growth of revenue versus expenditure as it relates to overall income and the admin expenses. The cost of generating income should be also looked at here, because interest expenses last year 10 mil versus 53 million in income, and for this year we only have a 20% growth in interest expense, but we have about 20% increase in the interest expense from last year to this year, but the interest income grew by almost 3 times.
Yeah, that's quite impressive for real, bro, because that just goes to show again efficiency. You're securing low cost debt and lending it out in a smart manner to generate the most return possible with the funds availability. I think is very, very impressive, honestly. Just applause to the Dollar team. Oh my gosh, it sounds like I'm selling the IPO, but honestly, it's just genuinely that impressive. I'm not
Yes,
even gonna lie.
it's good business. It's good business.
Very good business, and they make it so clear and easy to understand. Literally, if you don't understand something, you can Google it and figure it out in the prospectus. It's very, very clear. Usually, anything that I see that would trip up people is just jargon, which, as I say, you can Google it and find out what it means. But they do their best to make it clear.
All right. So another thing to take note of is that we're seeing a lot of growth in the company on the top line, and we're seeing that the admin expenses are growing at a lesser rate in relation to the income growth. Another thing that we should look at is the fact that because this company is going to be listed on the junior market of the JSE, we will be seeing a tax break for the first 5 years and then a half tax break for the following 5 years. So we see $38 million in taxes for the fiscal year ended 2021. We won't be seeing that amount of income taxes because of the tax break for the first 5 years.
Definitely. And I'm just going to add a small thing right there to state that even though, and as you said earlier, I think you should put it in as well, we're going to see some of that tax that we have there now trickling down to the bottom line. However, with the other holdings in other territories, we see that they make quite a sum from their Guyana operations. So that is important to see how the Guyana operations grow and how the taxation will affect that department of growth. So yeah,
That's a very
definitely
key
going to
point.
come down because definitely going to come down. But with growth in the Guyana operations, as well as because they're highly denominated in Jamaica, they make most of the money from Jamaica. But other territories, so some tax will remain.
And they expect to expand into other territories as well. So it won't.
Yeah, which
It's
will
not like.
probably be taxed.
Indeed, indeed. And on that Guyana point, that's a very serious point that should be looked into, because the rate of growth that they're showing over there is also not normal. It's not just their Jamaica growth. They
Yeah.
in August of 2021, their loan portfolio in Guyana, Dollar Guyana's loan portfolio was 15 million Jamaican dollars, the equivalent. And in March 2022, as they put out in the prospectus, the loan portfolio was equivalent to 70 million Jamaican dollars. Now, yes, this is smaller than $750 million, but it's the pace of growth that we're talking about. They just went out there, they just set up the operations. We're still in the middle of coming out of a pandemic. Yes, there's all of this oil money, but they also have a serious underbanked sector. The economy is similar to Jamaica, a lot of informal businesses and those type kind of things. So there's a lot of opportunity for microfinance, and we see them capitalizing already. I'm interested to see that growth as well. All right, and then you guys know my favorite part already, as with every video, risk factors. All right, so we've spoken about a lot of positive things about Dollar so far, but as if you're listening keenly, you'd have heard us mention quite a few times that the microfinance industry by nature takes on a decent amount of risk. So we're just going to touch on a few of them. Again, this prospectus is pretty clear, so they're pretty extensive about the risks that they face, as well as explaining the strategies that they have to mitigate them. But we're just going to touch on a few here. So the first one that immediately jumps out at you is they're in the business of giving loans. So you have the risk of default. So if people fail to pay back their loans, then Dollar generates no interest income. They have their interest expense that they have to pay, and they will end up in cash flow problems. Or once the Microfinance Act passes, if they exceed the band for whatever the conditions may be as at the final law, we can only speculate. But if they exceed, there will be penalties. Whether those penalties are fines or suspension or revocation of license, you know, we don't know as of yet, but there will be penalties, and so that is a risk that you want to look at and say, keep an eye on how high is their non-performing loans thing. Make sure, calculate for yourself when you see the ECL write-off, and make sure that it's at a reasonable percentage. I believe right now that they're writing off about 5%, which is standard, so that's perfectly fine. The next major risk that I want to touch on is liquidity. So liquidity in accounting refers to your ability to pay your short-term obligations. So again, they're in the business of cash flow. They need to get the money at the time when their thing is due to pay their thing, and they have the rest as their own money. If they fail to collect money on time, or let their balances get too low, then you could have a challenge. Again, they can't meet their obligations, which may result in their cost of debt increasing, because now you may have, oh, no, dollar is unreliable. No, they go through, and we can see where the current cost of debt is not too bad, especially given the rates at which they lend out at, given the nature of their business. But it's something, again, to keep an eye on. You know, these are just things. This is not necessarily, these risk factors are not necessarily things that must go wrong. These are just the things that we watching. We may have employer default. I may be employed to a business, and the business is in problem. I may have let's say, again, the dollar value personal loan, which is a significant portion of their business. My employer may end up in financial troubles. We're just coming out of a pandemic. I don't know if there's any statistics on how many businesses in Jamaica went under, but I'm sure it's quite a few. I know of at least 5 anecdotal evidence, pieces of evidence just through my own use of businesses. So, I mean, a lot of businesses were under pressure, barely made it through, didn't make it through, had to have conversations with staff and say, take pay cut. We're going to hold your pay for a month. All kinds of situations happened out there. So if I'm Dollar and I'm taking a salary deduction, and your employer is in trouble, so you have trouble getting your salary, that's a tricky situation, because who do I penalize? Do I penalize the person who took the loan? How do I do that when it's not their fault, it's the employer? So that one, when I saw them mention it, and I said, that's when I knew they were being extensive with it, because I didn't even think about it off the top, to tell you the truth.
I realized thinking about that, you know, with the line of the business, how necessary it was, because they mention, I see when they talk about the salary deductions, it's from dollar approved companies. So they do their assessment of the companies as well, not just of the individual that they're giving the loans to, the companies that they're also will be relying on for the security.
Indeed. So that's one of their mitigating strategies for us. So as I'm saying, they go through a lot and explain a lot of stuff's going on. Now, as we know, they're expanding regionally, so there's country risks associated depending on where they're expanding. As we just spoke about with Guyana, we have seen over history many a country get oil money and their economy ends up doing worse off because of misallocation of funds. No, not saying that this is what will happen to Guyana, but the risk is always there. and if you're in a country that already has a large informal sector, already is underbanked, and then you start having, you say, okay, there are economic factors that make this thing viable. Now, I don't know the full market research Dollar did and the exact decision-making process for going into Guyana, and I don't claim to, but I'm just speculating now. If it was these economic things, okay, they're getting oil, and then usually what you see is you find a middle class developing because people get these higher paying jobs and those kind of things if you check the history. So if that was the impetus, and then you have a mishandling of the entire situation, then the entire thing could not pay off. You could have political risk associated. People could decide they don't like this leader anymore, or the leader could be misallocated and end up in civil unrest. Again, not things that I am saying must happen or that I think will happen. Possibilities that exist, risk factors. So this is important. And then the most important risk factor I'll have Mr. Nunes come in and talk a bit about is the Microfinance Act 2020, currently under review in the Parliament.
Yes, so this Microfinance Act, it was actually extended from last year. It was supposed to be closed around last year, August, but there had to be some extensions because, as you know, there are a lot of kinks to work out. Now we'll have microfinance institutions operating directly with the watch of the BOJ. So with that in the mix now, we have a sector that was pretty much unregulated before, now coming to its own, and now we're going to see some consolidation in the industry. So what that causes a risk factor now is that, let's say this company is not approved for its license. I think the deadline for applications this year is around July, and as you know, this company comes before July. So let's say around in July we hear that this company is not accepted to get this license, or doesn't meet the requirements at this time. It doesn't mean they can't apply again, but there's still a lot of kinks to work out here in terms of the industry. It was basically a wild west in microfinance. This company has obviously been operating above the board, and they've been, according to the prospectus, really good. And so it has the opportunity as well to take on other microfinance institutions, although that's not a risk right there, but that can actually lead to growth for them. But the Microcredit Act should make the industry better, but in terms of its clarity, currently nobody is clear as to what the guidelines would state on the Microcredit Act, as it's constantly being revised, and the final revision people should get some clarity on the final revision in July. But as well, you touched on risk factors. That's my first risk assessment on this, the getting of the actual license to operate. The second one includes inflation, because looking at some historical measure here from where in the IPO, the historical review from 2014, not 2014, sorry, it was 2017. So I was looking on the financials for this company, and I was realizing that coming from a time of higher interest rates, they had a couple years worth of slow to no net profit at all, the negative profit, and maybe that can be attributable to the industry itself taking some time to grow. But as well, it's important to note that during this period, interest rates was a little bit higher than it was in 2019 when the company started to pick up steam, and also through to 2020 to 2021, where we had historically low interest rates. So we can probably, as Schaunn used that fancy word earlier, and I'll take it from him, we have anecdotal evidence to say that these companies tend to perform better in environments where the cost of capital is low, because these companies on lend, people lend to them and they lend to you. So when cost of capital is pretty low and inflation numbers are pretty low, which goes in line with interest rates, these companies would tend to perform better because they do normally have above average interest rates due to the the risk that is being taken on here. But it's important for the near to medium term to note these factors of what we're experiencing, because we're actually in extraordinary times right now. It's amazing that dollar has been able to beat those numbers in a pandemic, you know. However, we're still not out of the woods yet, and it's actually now that we're seeing an increase in interest rates. So it's interesting to see what happens going forward, because that is a big risk factor to me, seeing that the BOJ even came out and said they're looking at a 15% inflation target. So at this target now, if BOJ continues to raise rates from the 5% where we're at now, loan taking can become a little bit tapered down. So that in turn affects its bottom line right there, and also customers' ability to pay off in the near to medium term. So we spoke about licensing, we spoke about inflation, and I mean, those are my two major topics. The other, I think Sean covered on, which was, of course, default. But yeah, those two are my major concerns for the near to medium term: licensing processes and inflation, which I will continue to keep my eye on.
Yeah, I want to touch on the BOJ interest rates that you brought up there as well, because I think that in Jamaica we don't really watch policy rate that much, right? But I think this policy rate situation in Jamaica is particularly interesting, given that the BOJ is recently independent, and so now this is the first time that we're fully seeing them making all of these decisions without any government oversight at all, and we are already um, at the same 5% that we saw when dollar was having challenges in 2017. Now, this is a much stronger company than back in those times in 2017, as well as the environment is different. We've come down into a much lower rate environment. People are used to certain things. But as you said, inflation is a killer. And if the BOJ continues to increase these rates, Dollar has made a mention in the prospectus to say that because of their insanely large spreads, they will be able to stomach this increase in rates for a bit longer, even if it begins to pass through to the financial institutions that they are getting their loans from to on loan to you. So I'm not as worried about that, but I am watching it again keenly, because as we say, cost of the debt or the cost of capital is something that is majorly important to their spread. Margin compression is not good. If we see, as Dundas said, there was a 20% increase in the interest expense, and you from that you were able to generate 160% increase in interest income. We're not gonna see that if the interest rate environment continues to be aggressive and has to continue raising. So that's something I want to watch very hard.
Fully agreed, Sean. But I would rather uh I accept your point, but in a sense, I'll challenge you right there to say that I understand that their spreads are good. However, it's an end-to-end agreement from client to company. And I mean, while the company's spread might can take a hit, you know, take a little decrease here and there, I'm more so worried about the client's ability, because the client has also his or her obligations to make this payment. And if inflation rises, you know, they also lose the ability on their margin sides as well. So while we can worry about dollars margin side, what about the customer's ability to pay? So when we look at rising interest rates and inflation, there we can have an issue from the client to pay dollar in the first place. So that is why I don't I have, in terms of what I see from dollar here, their margins are pretty good. They can probably stomach another 5% increase right there. But on the client side, are they, which is pretty important to state.
Very true, very true.
Good points.
Because we see in the US the responses to these increasing rates, because in the US rates are increasing everywhere. We see mortgage rates going up to 6%, and we see home buying still home buying is going up, but it's an interesting thing. If you look at it, it's really high end housing that's being sold a lot of the time in the US. So where you find these middle and low income housing purchases have stopped, because people, as you said, they can't afford to take out the loans because of inflation and the rising environment. higher cost environment. You get me? Because these increases in interest rates are a response to inflation. You know, so I do agree with you. You get me? I'm not disagreeing with you, because you don't, these central banks, both locally and overseas, are raising their interest rates in an effort to curb inflation, to cause people to think about doing these kind of things. Are you going to take out a mortgage on a higher rate? Can you afford it? Are you going to make this big car purchase now? Are you going to do these kinds of things? It's in an effort to kind of stop that spending. So yeah, I do think that it's very key to watch, because people are going to have to make decisions based on the buying power that they have.
Definitely, man. Because remember, we're dealing with an ecosystem here, and one cog in the wheel goes missing, it all falls off. So,
All fall.
as you
Yep.
said, pretty right. We have client to company, client to company, and once any of these wheels shake here and there, while a company may be able to take some margin loss, the client is usually exposed to the highest risk as they don't have the balance sheet of a dollar. Not necessarily that,
True. True
but
word.
or the amount of clients as a dollar, because maybe two or three of these clients have only one stream, one source, and if their source goes down, like how tourism went down, that's another consolidation and pivot out of this industry now, and another set of potentially bad loans which can breach that BOJ target of 5%. And as you say, in the medium to near term, we're experiencing extraordinary times right now where we're entering different waves of this pandemic and different uncertainties. Right now we're experiencing drops in the markets and all of that. So it's very interesting to watch near to medium term.
Yeah, these next 2 3 years in my eye, um, the whole economy wise, I'm watching very, very, very closely to see what are the bright spots and the dark spots, because it's gonna talk to us a lot about not only dollar, but a lot of companies on the market that we invest in. But on the last thing that I wanna get on is get some perspective. Mr. Nunes, you're in the industry. As you say, when we spoke about the Microfinance Act, you gave a nice little idea of where we are and what it's looking like and what the challenges may be. So I just want to hear from you, based on this environment that we're in and how things are looking on the company that we've looked at, and how, obviously I don't want you to tell me details of how your business is doing, but you'd have some personal experience of what's going on in the industry a little bit. You can just give me an outlook over the next like year or two.
All right. So um actually my outlook on the industry over the next year or two is one, it's of, I would say, reserved optimism. Reason being because the times that we're in is currently shifting a lot. I mean, I see a lot of pivoting. Even let's, since you want me to diverse some of my business here. So in terms of personal clients, that's not necessarily my heavy focus. Even on dollars sheet there, we can see that it's not a heavy focus in the business, but it's a high income earner. So it's very important to the industry. But when you look on your personal side of funds that you disperse to unsecured clients, this in downturns can become a problem. We saw it with Access Financial during the pandemic when their numbers got pretty bad, and you could see that their personal loans was heavily affected. Or in this case, what was the name of Dollars product? Whatever it was called. But their unsecured loans, that's where you'll find a lot of clients. Because remember, while businesses may have assets and cash flow, personal loans that are necessarily unsecured won't necessarily have anything behind it to, for you to go at. So this is the heaviest, risk side to your business. So while now I think that the issue we've had was that in the economy was that the the pertinent authorities or governments didn't scale us into this um high inflation period properly. So now we're forced to push inflation heavy onto consumers. And this heavy push of inflation and the heavy push of the interest rates onto consumers really throws them off, because now instead of gradually fitting it in, for example, from 2020, which interest rates didn't move at all, and we were finding it absurd, even though the economy was just obviously in dire strain. Now we're looking at it and saying, okay, wow, we need a 50-point basis addition, and that really hits home heavily, especially for manufacturers who need some liquidity. It makes getting US dollar, borrowing in US dollar a little bit cheaper, but at the same time, Jamaican dollar borrowing gets a little bit more expensive. So, I mean, with this dynamic, some people benefit, some won't. But at the same time, it's interesting to look at because, as we know, businesses are dynamic. A lot of them will pivot and a lot of them will push on. But for the near term, cautiously optimistic because what I've learned during this pandemic period is that businesses they're gymnasts. They're gymnasts, man. They're very, very athletic. They have the ability to chop, change, and make smart decisions, and literally even grow the business. I was pretty surprised starting a microfinance company in a pandemic and actually, seeing it grow. I was pretty excited for my clients, even though my main thing was to make sure that, we have back our money and time. I was pretty much a fan of the clients because, I mean, it was really good. I mean, I swear these people deserve gold medals. But then again, how long can people manage sustained, pressure on their margins and sustained pressure on their logistics on a whole? Because shipping is still out of whack, for the manufacturing industry. And, going forward for the end of this year, it's not so much a practically good outlook, but let's just say, let's just look at it this way. The clients keep finding a way. And I mean, I think the industry will continue to grow. However, we'll see how the portfolio, because we looked earlier on how the portfolio was basically balanced in different industries, manufacturing, trucking, and all of those sectors. Tourism, we might see a pickup of tourism now that we're out of this period where flying is prohibited, or in some countries, or what these lockdown stuff, it's kind of slowing down. So we're seeing more of a return to tourism now, and I expect that also on dollars books to the loans to sort of increase because the outlook on tourism now is a little bit more positive. So, we may see some reshuffling there. We may see the manufacturing industry, which was so strong in the pandemic, go down because now we're experiencing a lot of supply chain disruptions. But the truth is that with a balanced loans portfolio, as we say with dollar here, it is very much possible to mitigate a lot of these issues that we face. So my outlook, conservatively optimistic, but I expect us to pull through anyways.
I would definitely agree with that wholeheartedly. I'm cautiously optimistic on the whole economy. As you said rightfully, a lot of this is supply chain related, and I know the BOJ gets bashing for raising rates in the face of supply chain issues because it's not necessarily going to fix those issues. But I understand and I support the BOJ decision. But I think it's definitely um, cautiously optimistic would be the best way to look at it because, as you said, we see where the industry is proving resilient. We see where businesses are doing a lot of work to figure out how to make themselves come through and still survive. Um, and we see Dollar themselves as a business with a plan to diversify their thing and make sure that they are set so that they can handle anything that comes around. So I do share that look, even though I am not in the industry. But so now the major question now, Dundas, are you participating in the
Come
IPO?
on now, this $3 financial services bill. Come on now.
All right, Mr. Nunes, are you participating in the IPO?
I'm the worst person to ask. I'm already in the industry, so I have a bias. I love it.
Hey, Kadid, what your competitor buy out your company here?
Don't. So,
Oh
Sean,
yes, so that sounds like.
will you be
Oh yes,
participating?
yes. I will be participating in the IPO. I do believe I will. I'm quite impressed, as I say. I love the whole access to credit, access to finance thing. I'm a stickler for those kind of things. So I
That,
will be participating. I'm very excited. But as usual, this is not financial advice. This is the opinion of three youngsters. All of this that we've done, you should go and read the prospectus on your own. Speak with your licensed financial advisor. Find out if the opportunity is right for you. As we said, there are some risk factors. So depending on your outlook, you may or may not want to participate. But we will be participating. So I'd like to thank you guys for sticking with us. Sorry we're late. We know you've been asking, but like, share, subscribe, and we'll be back with another one soon.